What's going on, team? It's Caddy with Money Investing. I hope that you all are having an amazing day. In this video, we're going to ask ourselves the question, who was really behind this stock market rally? So we're going to try to figure out who was buying and or selling during this time and where was the volume and the volatility coming from. So if you guys enjoyed this video, please make sure to give it a thumbs up and subscribe to the channel and hit that notification bell so you don't miss out on any future videos related to the stock market, investing, and technical breakdowns. Also, make sure to give this video a thumbs up because it really helps out with the YouTube algorithm and recommends this video to other people who might be interested in watching. So now, before we get started, I want you guys to understand that there's primarily two types of participants in the market. There's retail investors and then there's institutional investors. Now, for those of you who are not familiar with the difference between the two, retail investors are people like you and I that are trading and or investing with very small share sizes, and we're basically investing for ourselves. Whereas institutions are the big banks, the hedge funds that are trading and or investing with millions of shares and are trading and making money for the corporations, for the hedge funds that they trade and invest for. So that is the key difference, and that results in the changes in volume. So due to the fact that retail investors like you and I are trading and investing with such a small share size, we don't make majority of the volume in the market. Institutional investors do. Now, back until 1950s, where retail investors essentially had the dominance over the trading volume with controlling over 90% of the trading activity in the market, that number has dropped down to less than 30% today due to the progression in technology, smart computers, and all the different strategies institutional investors have access to, which is why they're trading at much higher volumes as opposed to retail investors. Now, this is a chart that I shared in one of my previous videos. It essentially is the New York Stock Exchange total volume indicator. And this represents the different spikes in volume that we have seen over a given time frame. Right now, you guys can see that I'm on the daily chart, but we can also look at the weekly or the monthly chart. But looking at this pattern right here, you guys will notice sudden spikes that happen out of nowhere on a given day. So back on February 28th, we saw a spike of close to 40%. You guys can see the change right here, right? It doesn't necessarily tell us whether they were buying or selling. It just tells us that there was a spike in volume on that day, close to about 40%. Now, if you go further, on March 20th, we saw another spike close to about 58%. And this is also during the time when the stock market was selling off pretty aggressively. And March 18th to 23rd, that's the 5-day period when the stock market bottomed out. So March 20th is when we saw another spike in volume, close to about 57%. And then you'll notice that the volume died down for the next few months. And then again in the last week of May 29th, when the volume again spiked about 132%. And then now you guys can see that it died down again. So the reason why I wanted to bring this chart up is because I wanted to identify these different spikes in volume that happen every now and then. And that essentially represents that institutions are either buying or selling, and then they're holding until the volume dies down. And that's when the retail investors come into play and trade on the free public markets until the next decision made by institutions. Again, I want to mention that this doesn't tell us what the direction is, whether institutions are buying and or selling, but it does give us a good understanding on when those decisions were being made and when the volume saw a huge spike. So now let me compare this with the S&P 500 index. Let's just go ahead and put them side by side. So we're going to type in SPY, which is going to be the ETF that tracks the S&P 500 index. And we're going to the daily chart, and I'm going to remove all the different trend lines that I have. So this right here is going to be a straightforward comparison between the total volume in the New York Stock Exchange versus the S&P 500 index. Now, we understand that this right here on March 20th is when we saw a huge spike in volume up to about 57%. Where was the S&P 500 on March 20th? So on March 20th, we were right here. We were almost at the bottom, hitting about $219 for the SPY, which is again the ETF that tracks the benchmark. In my opinion, again, it's very hard to predict or understand or even find out who was essentially buying and or selling during what times, but I will be sharing a couple other sources and different websites that are really interesting to look at when it comes down to retail investing, Robinhood trading, and or finding out when people are buying and or selling. So based on this information, when there was a spike in volume, the S&P was at its lowest. I find it really hard to believe that when the market has already dropped close to about 31 to 32%, that the institutions would be selling at that point. What I think was, when you look back in February of 2020, so this right here, in my opinion, I think that institutions were selling and they were buying on March 20th. So that's just my opinion, and I'm making a guess here based on the information that I have. Again, it's very challenging to understand when institutions are buying or selling, but I wanted you guys to see this right here just so you have an understanding of when the volume spikes versus where the S&P is. So there's one more index that I wanted to share with you guys. It's going to be the tick index, which essentially is the New York Stock Exchange cumulative tick index that goes over in a given period of time how many stocks are ticking up, meaning going up, versus how many are ticking down and or going down. So it gives you a good representation on the direction, whether stock prices are moving up or down. And if you were to identify this area right here from late March all the way to May, this is also the stock market rally we've seen. And most of the times, the tick index was above the white line, which is going to be at 0. So the tick index is going to be between a positive or a negative value. If it's positive, that means that more stocks are moving higher than they are moving lower. And that's just basic economics. And then you can see that more recently, it's been kind of volatile and wavery between the 0 line, and it's been kind of up or down. So there's a lot of indecision in the markets based on where the direction is going to go. Now I'm going to share another website with you guys, which I think is really, really interesting data to look at. And the website is called robintrack.net. And I will put a link down in the description below. But let's just jump over to that website and see what they have to offer. All right, guys, so here we are inside Robin Track, and this is a website that I wanted to share with you guys because I found it really, really interesting. So let's just go ahead and type SPY, which is again is going to be the S&P 500 index ETF that tracks the market benchmark. And what we're looking at here is going to be the pink line is essentially the price, right? That's the price for the S&P, and we already looked at that on March 18th. Around that level, the stock market bottomed out. That's the point when S&P was also at its lowest point. But the green line that you guys see is going to be how many people or how many users on Robinhood are actually holding that stock. So back on December 11th, there were just over 40,000 people holding SPY. But as the market was selling off, you guys can see that more and more people were holding SPY. And that number has skyrocketed all the way to over now 100,000 people holding S&P 500 index ETF, ticker symbol SPY, on Robinhood. Now, I was a little bit skeptical based on the accuracy for this information, but it's actually true. If you jump over to Robinhood and type in SPY, that's going to be the S&P 500 index ETF. You can see that it says 100,000 people own S&P 500 ETF on Robinhood. So that data is accurate. And it's really interesting to know and see when people are buying certain stocks on Robinhood, because Robinhood also doesn't allow you to short any stocks. So the only positions people can take are long positions, meaning that they can only buy on Robinhood. So it's really interesting to look at the user count versus the prices and when people are actually making those decisions. So going back to this website, if you were to type in Delta, which has been one of the hot stocks, you guys can see that back in February, the amount of users that were holding Delta stock was relatively low, close to about 17,000 people. And then as the stock price started falling and it dipped all the way down to $21 a share, we've seen an incredible spike in the amount of people that are holding Delta stock to now close to 600,000 people. And the price is $30.43. And I bet if you go back to Robinhood and type in Delta stock, they're going to show the exact 600,000 or 591,052 people, to be more precise, that are holding Delta stock on Robinhood. So right here, let's just type in Delta again, and we're going to see close to about 591,060 people. That's the same exact number that we found on Robin Track. So now the way they do that is they essentially take into account all the user activity from Robinhood, put it into a CSV file, and design a line chart with the stock price for that ticker symbol. So I think it's really interesting to see when people are buying in or selling on Robinhood, and I wanted to share that with you guys. I hope you guys find that interesting as well. And let me know in the comment section down below what you guys think about this entire narrative. So currently, people on Wall Street think that retail investors were the ones that drove this market back to near all-time highs, but I'm going to share a couple articles with you guys that I found relevant to this video. So this right here is the article that I wanted to share with you guys, which was published by Forbes, and it essentially says, no, the market is not rallying because of Robinhood traders, Barclays says. And you can see the flood of new retail investors making speculative stock trades are not behind the market's recent rally, according to the new research from Barclays. If you read further into the article, it essentially says that Barclays analyzed Robinhood customer holdings and compared to the daily market returns and concluded that there's no clear relationship between retail investors adding shares and the S&P 500 index moves. If you read further into the article, it essentially says that since March 2020, we have seen the opposite of the conventional wisdom. All else equal, more Robinhood customers are moving into a stock has corresponded to lower returns. Now, I do want to mention that Robinhood is a low barrier to entry when it comes to investing in the stock market. Now, with the introduction of fractional shares, you can essentially buy some of those most expensive stocks like Amazon for the fraction of the price and get a small piece of one share. So there's definitely a lot of retail investors moving into the market. And with the increased liquidity, there's a lot of investment activity that we're seeing more recently than compared to years ago. So like I mentioned earlier, the Robinhood has added over 3 million user accounts, new user accounts over the last few months. It essentially goes over a wave of new retail investors piled into the zero-cost brokers like Robinhood, Charles Schwab, TD Ameritrade as the market hit the recession low point on March 23rd. Robinhood, for instance, saw a historic 3 million new accounts added on its platform during the first quarter as stocks plunged in the fastest bear market on record. And then it goes on to say that Barclays analysis uses data from RobinTrack, the website that we just looked at, which tracks the number of Robinhood users holding a stock over time. Now, like I said earlier, Robinhood doesn't allow you to short any stocks, and you can only take long positions. So we know for a fact that everyone who's holding that stock on Robinhood has a long position on that ticker symbol. We don't know what the price is or the cost basis is, but we do know that the decision or the outlook for that stock is more bullish. So there's just one more source that I wanted to share with you guys when it comes to institutional buying and or selling and or insiders buying or selling. It's going to be Finviz. And if you come over to their insider tab, the website is finviz.com. And if you come over to their insider tab, you can see the ticker symbol, the person who purchased the stock or sold the stock, and then the relationship to the company, the date and the transaction, whether it was a buy, an options exercise, a sale, the cost at which they bought or sold or exercised that contract at, the number of shares and the total market value, and the number of shares total that they currently own. But I wanted to make this video just so I can give you guys my opinion and my analysis of what's going on in the markets and allow you guys to kind of brainstorm ideas and think for yourself based on all the data that we have available. Where did you think the volume came from? Was it more of a retail investment or was it more institutions? I personally think that it was a mix of both, but it was primarily dominated by retail investments because of the fact that we've seen such a low barrier to entry and so many people actually getting into the stock market, investing their money as well, and thinking about the long-term future, thinking about their personal finances, which in my opinion is a great thing. Everybody should be doing that. And all being said, I hope you guys enjoy this video and please make sure to give this video a thumbs up. Subscribe to the channel if you haven't already. I really do appreciate you guys' support. As always, happy investing, and I will see you guys in the next video.